We're having a quick bounce here from Bitcoin. We're up about 8% from the bottom, right? And everyone's pretty much convinced that this bounce could be real. Now, the big question is, what's going to happen after this bounce? Is this bounce going to reject like all the other bounces have rejected? Because it's not the first time we've had a bounce. I mean, as you can see, we had a bounce over here, which took us up to about this level over here. Also about an 8% bounce. We had another bounce over here, which took us slightly higher than 8%, about 12%. The question is, what happens after that bounce? Do we put in a lower high over here, or do we repeat 2021 and put in a higher high? Today, I want to show you the case for what I think is going to happen, which is we're going to repeat the 2021 scenario where this correction is almost this thing over here. Then we've probably bottomed, and then we'll start climbing up, and eventually we'll put in a higher high. That's the scenario that I want to discuss today, and I want to show you all the data that actually backs that scenario. And at the end of it, we can decide if that's the case or whether the technical analysts win, and we're basically going into the end of the 4-year cycle and into another bear market. So if that sounds good to you, I think you're going to have fun on today's show. Let's get the show on the road, guys. All right, let me know in the chat which side you're on. Is it the side of a relief bounce that is going to be rejected, or is it the higher high in 2021? Let's put a poll up there so we can actually talk about this. Either way, regardless of which way you believe things are going to happen, I'm just glad that that the mayhem of last week is actually finished. And it really did feel like mayhem out there last week. I can't tell you. I mean, it did feel like, if you've been here for multiple bottoms, it did actually feel like we somehow capitulated. We somehow got into some kind of bottom structure. And I want to show you the data around that bottom structure as well. So it's going to be a big show. If you are new to the channel, what I need to do is subscribe to the channel. If you've been here before, all I need to do is obliterate the like button. Let's get as many views as we can here. Let's get this circulation, as much circulation as we can. It's a short week this week. It's actually Thanksgiving week this week. I think Thanksgiving is on Thursday, but there's a lot happening this week. One of the things that's happening this week is we're getting the PCE data, the PCE inflation data. Now, the reason why that PCE inflation data is so important is because, remember that, I just want to see what date PCE actually is. Here it is. So we've got PCE inflation data coming out on Wednesday. Now, the reason why that's so important is because, remember, we didn't get CPI data. And remember that the Fed also used PCE as their measure of inflation, personal consumption expenditure, as their measure of inflation. So it's actually quite a big week, and that could be one of the reasons for the actual bounce. As I said, though, either way, I'm happy that last week's mayhem was finished. After we broke the story, or after we started to report on the story, I mean, look at this tweet. This tweet got saying like 10,000 likes and over 2.2 million views. This is where I broke down the whole MSCI MicroStrategy thing. And I also made a show on the Crypto Insider channel. You can see that show on the Crypto Insider channel absolutely exploded. It's got like 156,000 views, and it's still growing really fast. And that's where I broke the story, or well, I think I was one of the first people to report on the story about what the MSCI was planning. And what the MSCI was basically doing is, they are the agency which creates indices, so to speak. And if you are included in the indices, then all the passive funds effectively flow into your stocks. And if you exclude it for any reason, then the passive funds exit your stocks. And their proposal was to remove all crypto treasury companies, including MicroStrategy, from the indices. And the reason why they said that is because generally in the indices, they don't have passive holding funds or investment companies or trusts or anything like that. And so if you look at what they actually published, they said MSCI proposes to exclude from its global investable market indices companies whose digital asset holdings are over 50% of the assets. Now, look, this is ludicrous, and obviously Michael Saylor has actually responded to it. And I want you to hear his response before I give you my opinion about what's actually going on here.
I just want to ask you about the JP Morgan report that came out this morning, warning that strategy could be excluded from benchmarks like NASDAQ, MSCI, and it could trigger an estimated $2.8 billion in automatic outflows. That's just from the MSCI alone. What's your response to that?
I think it's a bit alarmist. I'm not so sure the numbers are nearly that high. I think actually the numbers would be much smaller. I also think it's already priced into the market by a factor of 10 if you count it. I don't think there's any relationship between the decision making of MSCI and the NASDAQ 100 or the S&P 500 index allocators. The company is an operating company. It's just like insurance companies use capital in order to create financial products, and banks use capital to create financial products. We use capital to create digital credit finance products. It's possible there are people in the world that don't fully appreciate digital credit or digital treasuries. That wouldn't surprise me. We had that challenge with bankers that didn't want to bank Bitcoin. We had that challenge with accountants that were a little bit skeptical of digital assets accounting. The accountants embraced the asset, the bankers embraced the asset, the politicians embraced the asset. We had the challenge with credit rating agencies, and they just embraced the asset. We're starting to get credit ratings. We have the challenge under the Basel Accords, where Basel Accords allocate zero value to Bitcoin, and now they've announced they're going to reconsider that. So I'm not concerned that we have these kind of concerns.
So that's Michael Saylor's response to it, and I think that I agree with him. But what's also starting to emerge is that this is very, very, very much a political attack. And I mentioned it in a Twitter post, and I'm going to make a full video on the other channel around how this thing is politically motivated. The reason why I'm holding on there is because I have a source that is feeding me the information, and I'm just double checking all the information before I actually break a video. Let me tell you though that if the information is true, this thing is definitely politically motivated, and it's a target against Trump because they know that Trump's all in on crypto, and Bitcoin and MSTR and all that are just the little pawns here. But let me not say too much about that, because that I'll make on a video on the other channel. If you're not already subscribed to the other channel, go and have a look for Crypto Insider, subscribe to the other channel, because that video will drop today, maybe tomorrow, as soon as I can confirm all the information. As it relates to what the MSCI is actually proposing here, I think it's pretty much, when it comes to Bitcoin, you can kind of say, you know what, maybe it's a gray area. Maybe, because Bitcoin is not a productive asset. Then you can say, you know what, Michael Saylor only holds Bitcoin. He doesn't stake it. He doesn't lend it. He doesn't do anything else with it. So you can kind of say that maybe, when it comes to Bitcoin, then it's a gray area, even though I think Michael Saylor's point is much stronger than the gray area point. However, if you look at what they're talking about here, they're talking about not Bitcoin, but they're talking about Bitcoin or other digital asset treasury companies. Now, when you talk about other digital asset treasury companies, a lot of the other digital asset treasuries are proof of stake type assets. Assets like ETH, assets like SOL, assets like BNB, assets like TON. Now, when it comes to proof of stake assets, I mean, these companies are staking them, they're running validator nodes, they're doing voting, they're doing liquidity farming, they're doing yield farming, etc., etc. There's no way that you can deem that company is a passive holding company or not an investment trust. You just simply cannot say that about proof of stake assets, right? And so that's why I think that if any logic or rationality prevails here. Now, the reason why I say if any logic or rationale prevails here is because if this thing is politically motivated, then you've got to throw all logic and all rationality out the window, right? If, however, this thing is not politically motivated, then rationality should prevail here and market forces should apply here. And therefore, if market forces apply here, I don't see how you apply that to a proof of stake asset. I mean, how would a passive investment holding company participate in staking, do voting for proposals, run validator nodes, etc., etc., etc.? It just doesn't make it just absolutely doesn't make financial sense. Anyway, be that as it may, I'm not the only one talking about this. There's many other people talking about it. I don't know if you saw this video. It went viral.
All right, so some of the comments online, people are talking about some of the previous videos and the timing on JP Morgan, okay, and when they actually increase the margin requirement on MSTR. So let's look at that, right? So I have an email here from JP Morgan on July 7th, okay? That is when they did a firm-wide increase in the margin requirement for MSTR. Now, let's look at that, right? So we have a chart here, right? And I overlaid the vol on that chart. Let's look at July 7th, this line here, okay? Now, on July 7th, the 90-day vol was going down between June and July. The 60-day vol is going down between June and July and continues to trend down. Stock price is stable, goes up for a bit, but now look, as they put this firm-wide margin requirement increase on MSTR, it goes up, but
so
then
long
it pretty
story
much
short, this is
precipitously goes down, right?
So long story short, this is what JP Morgan did. I'm going to break this all in one of my other videos as soon as I make the video, and then we'll just determine whether this thing is politically motivated or not. Either way, I guess what we can say is, thank God that last week's over. Thank God the mayhem's out there. It feels like maybe the last of the FUD is pretty much out there. Now we can actually get on with real business. What we're actually seeing now, though, is we're seeing that the funding rates have actually turned negative. So funding rates turn negatives when people are shorting Bitcoin so much that basically you're being paid to short. And so what you can see here is that the funding rates have actually gone negative. Now, when the funding rates go negative, traditionally, that actually marks the bottom and marks the bounce. If you look at these red candles over here, now I've taken this chart quite far back, but you can go back as far as you want to go. If you look at where the red lines are over here on the chart, can you see that? When we got a massive bounce over here, and again here, that was when the funding rates went negative, there was a massive bounce over here. When the funding rates went negative, there was a massive bounce over here. And you can kind of follow this chart all along. Every time the funding rates go negative, that's when we actually end up getting a big bounce. And you can see the same things basically happening here. We're now in negative funding rates, and that indicates to me that we may get another bounce soon. We also hit all the pretty like technical levels, which I'll talk about in a second. And it feels like we're ready for a bounce, right? Now, the question, if it comes to this bounce, is this bounce just going to be a bounce that pretty much goes up somewhere over here to the 100, or maybe even doesn't even break the 100 and then continues to go down? Or do we get a 2021 style bounce and then going straight back into a higher high? Now, spoiler alert, I tweeted on the weekend that I think that we're going to get a 2021 style comeback with a higher high. I said that, and some believes that we're pretty much going down. I'm going to show you all the data as to why I'm saying it, because I'm not just saying it blindly. I'm actually saying it backed up with a whole lot of data. In the short term, I think a lot of the market's concerns have basically turned the other way, right? So the first concern that the market had was around rate cuts, which would happen at the next Fed FOMC meeting, right? And if you look at the probabilities, I don't know if you remember, but last week, the probabilities of getting rate cuts were about 73.5, were about 50-50. And it even went into the realms of potentially not getting rate cuts. Now, on Friday, that changed. And the reason why that changed is not because of inflation or stuff like that. Because remember, when it comes to inflation, the October inflation numbers aren't going to be published. The October inflation numbers are never going to be published. The November inflation numbers are only going to be released on the 18th of December, and the Fed FOMC meeting is on the 10th of December. So what does that mean? It means that the inflation numbers aren't what is actually impacting the probabilities of getting a rate cut or not getting a rate cut. Trueflation says inflation is coming down, and it's at 2.37%. But again, that's inconsequential because the meeting is on the 10th of December, and the inflation data is only coming out on the 18th. What's important now is the PCE data, which comes out on Wednesday. We get the September PCE data. But what's more important is that one of the more influential members of the Fed, his name is John Williams. He's the New York Fed president. He's very influential in the Fed. And he basically came out on Friday and he said, look, I see room for further adjustment in the near term, the target range for the federal fund rates to move to a stance of policy closer to neutral funds. So he's basically saying, look, we can actually reduce rates. He's one of the more influential ones. He sits, of course, on the New York Fed board. And basically, he's come out and said that, and that swayed the odds. So if you're watching the odds on Friday, what you realized was as soon as he started speaking, the odds basically went more into the realms of rate cuts. But I think all eyes on Wednesday's announcement, because it's the first one that we've had the first type of inflation reading that we've had since the government shutdown, and it's super important. The other big information piece that we have on Wednesday is GDP. And here, I think we might have a little bit of a problem. Why? Because the Atlanta Fed is forecasting that GDP will be plus 4.2. Now, you may say, okay, well, hold on. Plus 4.2 means the economy is flying. Well, that's exactly it. If the economy is flying, the last thing that Powell wants to do is lower interest rates and make the economy fly even more, because then you're going to get a heated economy and you're going to get a lot more inflation. And so I do think we need to pay attention to the GDP reading and to the PCE inflation reading that are both of those that are actually happening this Wednesday. Then on Thursday, I think it's Thanksgiving, and then I think Friday is like a half day on the market. So it's quite a tricky week to be trading markets if you actually are trading. All right, so that is the short term. Now let's look at the longer term, right? Because okay, so we know there's going to be a short term bounce. The question is, where does the bounce go? We've had an 8% bounce. Where does this bounce go from here? I mean, what happens? I think the short term is not that important. I think what's more important is that we start actually looking at the long term, right? And when I look at the long term, I look at a couple of things. Number one, in fact, let's look at it short term and long term. Number one, if you look at the correction, this correction has now reached the realm of most other big corrections. It's down 35% top to bottom, and in this cycle, 35% is really one of the biggest corrections. And in any cycle, actually, 35% is one of the big realms of any correction. The fear and greed, well, the fear and greed has been in extreme fear for a while now. It's been there for about 10 days, and that to me is one of the indicators around the bottom. The next thing is the short-term holder capitulation, right? And when you look at the short-term holder capitulation, usually when the short-term holders capitulate, that's a sign that we actually have to bounce. Now, this was the biggest short-term holder capitulation since the Japanese yen cash and carry trade unwind that happened last year. This is the biggest short-term holder capitulation. The other thing is that what we've seen is we've had the sharpest 30-day drop of the cycle. Now, historically, when we have the sharp 30-day drops in the cycle, that usually marks a bottom. And if it does mark a bottom, it finds the bottom at the average cost basis of the current ETFs. So that's quite a big level, because that's where the average ETF holder is actually in profit. So right now at 86,000 or wherever Bitcoin is, the average ETF holder is about $3,000 up on their investment. Now remember, ETFs make up a massive part of the Bitcoin holding base. About 4% or 5% of all Bitcoin in circulation are held by ETF investors, and they now exactly $2,500 about their break-even point. Then you've got Bitcoin bouncing off its production cost. Now, what you realize is that in bull markets, generally Bitcoin stays above the production cost of Bitcoin. If we break below, generally that signals that we're going into a bear market. Now, we've just bounced off this production cost of Bitcoin, which is, I mean, that's quite a big level. Like this is a massive indicator, because only really in bear markets do we actually go below the production cost and stay below the production cost for a long period of time. The other indicator which I'm looking at here is the risk off signal, which is published by Swissblock. And it said the risk off signal is dropping sharply, which tells us that the selling pressure has eased and the worst capitulation is likely behind us, right? There's one other indicator that I'm looking at, and that is the Bitcoin open interest of leverage versus the total open interest of leverage. And here I want to see the index go to 50%, because when we're at 50%, that's generally when we bottom. And now we're at 48%. You remember we last looked at this, we were at 46%. Now we're at 48%. So all those things have told me that we probably did bottom last week. Whether we bottom for a long time or a short time is probably a much more apt discussion. Now, I'm going to put my money on the fact that there's going to be a 2021 style comeback. And I want to paint this thesis for you so that you understand how I get this thesis, because it's not something that I just came up with and said, okay, well, we're going to get a 2021 style comeback. It's actually based on a lot of data and a lot of turning points. So the first data point for me is to say, look, we didn't have a blow off top this cycle. None of the blow off top indicators actually hit the cycle. You know, we've been tracking them, whether you track them on this CBBI indicator where you look for all of them to be red when we actually top, or whether you look at them on this chart over here, which is a chart that's been going quite viral in terms of the number of indicators that have actually hit the sell level or the peak level. You can see that none of them have actually hit. And so we didn't have a normal cycle this cycle. In every other cycle, we had pretty much a normal cycle where we had like the tops, right? So like in 2013, all these indicators topped. In 2017, all these indicators topped. In 2021, all these indicators basically topped. And here again, in 2025, we didn't have the indicators basically topping. So that gives me some hope that there isn't going to be that we haven't topped and that we could get a 2021 type a comeback. So if this were to happen, how do I see it playing out? Well, let me show you how I see it playing out. I think we chop sideways and maybe slightly up until probably the 31st of December when the news from this whole MSCI thing actually leaks and hits the market, right? So up until this decision is actually taken, or up until the news of this decision is actually taken, I think there's going to be a little bit of pressure on Bitcoin because I think we're always going to have a cloud over our heads. After this, if the decision is negative, then I could say if the decision is negative and the technical analysis indicators are negative, then I've got to concede that basically the cycle's over. However, if the decision is actually positive and that cloud actually gets removed, then it comes back to this tug of war between the technical analysts and what I call the liquidity cyclists. So it comes down to the technical analysts, which will say to you, look, the 4-year cycle's broken. We've broken through every single level. We bounced we bounced under the SMA 50. We stayed under the SMA 50 for a couple of weeks. Therefore, the bull market's over. The liquidity cyclists, or the people that are looking at liquidity, are basically looking at a couple of charts, but specifically, they're looking at this chart over here, which says that's global liquidity, that's Bitcoin. They've always been correlated, and they all of a sudden became uncorrelated. Now, we've spoken before about why they became uncorrelated. It could be because the old cohorts were selling. It could be that they were temporarily disconnected. It could be because of this MSCI FUD, which I'll show you in my other video when I show you how important this date over here is when these charts actually split. Because on that date, actually something happened. So on this date over here, actually something happened, and Bitcoin started going down, and global liquidity continued to go up. However, so if you're a liquidity cyclist, this is the chart that you're looking at, and you're kind of going, look, this is the thesis for the liquidity cyclist, and it's a very, very, very strong and a very compelling thesis. The thesis says the following: we have never entered a bear market during a liquidity expansion phase. This isn't about the COVID. It's about one sentence that says we have never entered a bear market during a liquidity expansion phase. And if you want to look at that graphically, and you look at it here, what you can see is every time that we have if we have liquidity expansion, the price of Bitcoin goes up, and when we have global liquidity contraction, the price of Bitcoin goes down. If you want to see that in a different chart, here's the chart over here. What you can see is this is the global M2 money supply. Every single time that we've had a Bitcoin bear market, it's because the money supply has been going down. And every single time that we've had a bull market, it's because the money supply has basically been going up. So now you've got the fundamentalists and you've got did you only put up the poll now? Sorry? Okay. So let's just vote in that poll. So if you're a liquidity cyclist, you're basically going, look, the money supply is going up. The Bitcoin chart is the money supply is going up. The Bitcoin chart is separated from the money supply chart, right? And the Bitcoin chart is going up from the money supply chart, and the gap between these two is starting to widen. And at the same time, you're looking at historically and saying, look, we've never entered a bear market during a liquidity expansion phase of the cycle. And you are effectively now in this battle between the technical analysts and the liquidity cyclists. And so to me, what I think is going to happen is one of two things. either this politically motivated attack continues after the 15th of Jan, in which case we're going to go down, we're going to potentially continue to fight headwinds, and that's going to take a lot longer to fight, and that could take another year to maybe fight. But ultimately, I'm hopeful that the outcome will be one of logic and rationality, which is what we've had up until now. The Biden administration kept us down up until a certain point, and then at that certain point, we started to bounce. If you look at, ironically, if you look at where we were during the Biden administration, which I actually want to show you something. I was looking at it this weekend, and I was like, this is where Trump basically came into power. So this was the end of the Kamala period, or the Biden Kamala period. That's about 74,000. That's the top, or 75,000 was the top of that range. We're only trading $10,000 above that right now, which to me just doesn't make sense. How is it that we're trading $10,000 above the Kamala range when everything else has turned this way? Which is why my money currently is on a bounce before the 74,000 level, on some kind of bounce. And then again, the liquidity cyclist part of me basically says that we shoot up above the all-time high because we just follow global liquidity. But I have to respect, the technical analysts have also been right for their share of the time, right? The one thing, as I mentioned before, that's giving me hope is that none of the top indicators were actually hit. And because none of the top indicators were actually hit, then it's like, okay, well, maybe we'll have a blow off top. Maybe we'll end up having a blow off top. All right, so let me know which camp you're on. Let me know if you're in the 2021 higher high scenario where we get like this big move up, or whether you're in the other camp. And the other camp is the camp which is basically saying, no, we're at the end of the bear market, and we continue to go down now. I really hope most of you are in the bullish side, but let's see what happens. Oh, what else is there? Okay, this is Thanksgiving week, and it's also, listen, guys, it's Black Friday week this week. There's multiple Black Friday specials. I think I've spoken to you guys before. Tomorrow, we're launching a Black Friday special on the 247 news terminal. Stay tuned. We're not ready with that offer yet. The offers that we do have left, there's about 50 or 60 places left in front runners. I said it to you guys before. I'm saying it to you guys again. I didn't want to do a thing. I think there's like, out of 500 that we made available, there's like 50 left. You get, if you do take this front runners thing, I mean, front runners is our personal, or my personal Discord. All my researchers live there. All the calls live there. Our birdie calls live there. There's probably 10 analysts that are working in there. It gives you very, very, very quick alpha. And you're not going to get another opportunity to get 50% off. Like, usually it costs $199 a month, and it's quite a limited group. We're going for $1199 for the whole year. It's going to end on Friday. So that's the first Black Friday special. Guys, there's like 50 spaces left. My best advice to you is, if you can, go out there and try and take it. The next one is Bitfunded. So again, if you want to trade with other people's money during this period, again, the Bitfunded is a prop firm, which basically lets you trade with other people's money. You can buy challenges, but now you can buy the challenges as bundles, right? So you buy 6 challenges, you pay for 3. Which is like, it's crazy. I think the price is, so $297 for 6 challenges. Like, that's honestly one of the best 2 deals. There's 3 deals that I'm looking at for this Black Friday. Front runners, 247 terminal, and Bitfunded. Those are the best deals that I've basically seen in the market. All right, chaps. I'm going to go and record the other video and just finish following up on my sources. I'll see you again in the next video tomorrow. Until then, trade well, my friends.